In this video, we review a trade with a developing trader and discuss ways to better prepare to execute their edge the next time it shows up. Hi, I'm Jeff Holden, Head of Recruiting at SMB Capital, a proprietary trading firm located in Midtown Manhattan trading equities, options, and futures as automated and discretionary traders. In this video, we speak with a trader who has been growing with our firm about a trade they have edge in and how they can study a big opportunity in detail to better prepare to execute it on the next time it shows up. Let's get to work on sharing this important trading lesson to help you grow your trading.
I'm Jake. I've been training at the firm for roughly 2 years now. Joined as an intern back in September 2019. Background in finance, and I've always had an interest in finance throughout my life. So catalyst trading, sort of breaking news trades, just stocks that have, or moves that have a narrative behind it is something that I've always favored, just because of being able to link that this love of finance and markets to that of trading and technicals. So this is a breaking news trade in Peloton. This took place in the third week of January. Right, so I just wanted to take a moment to quickly define event-driven trading. To me, there are three types of timelines and when to take these trades. How I would classify them: that's the anticipation of a catalyst, breaking news, so the initial reaction, and the follow-through, the move coming after the catalyst breaks, and then people have time to interpret that, and the move develops over time. Anticipation, just opening a trade with the idea that an event is going to be occurring and that the event will be able to cause the market to react. Yeah, so an example of an anticipation of a breaking of a news trade of say VORB, Virgin Orbit. They had a satellite launch, and you can assume that people who may not necessarily have been paying attention to this in the days leading into it would start buying it up, and in turn, if you had caught this in, say, the week prior and had anticipated this event and that it would be a bullish event, people buying into it, that you'd be able to get long and capture that move. Novavax alike said they have a timeline where they have to submit their EU emergency use authorization to the FDA, and if you're able to time that right, that you can anticipate it.
Would you consider something like Apple product announcements?
Sure, although something that's widely watched, the more well-known a catalyst is, the less opportunity there is.
Yep. Okay.
The idea is to find a catalyst that is a surprise or that many people aren't paying attention to.
Perfect.
Breaking news is pretty straightforward. It's just that initial reaction. Sometimes these can last as short as a few seconds to a few minutes. Good example of that was WBX, Wallbox, and Uber. They had a partnership announced just a few days ago. This was a secondary. This was just a wider partnership. And just watching the tape, the time it was during the pre-market, very early in the morning, wasn't a ton of liquidity, and because of that, the ability to make money on that trade lasted, I want to say, 3 minutes at the very most. Finally, the follow-through. So news isn't circulated to every single person who's trading financial markets at the same time, and therefore news is...
Or even if it's circulated, just to jump in, even if it's circulated, your second point, I think, is more important. Like, the news is out there, and I think I want to define this because I think people think we have this insane, or I hear sometimes the discussion that we have such a source, or such an edge because we get news faster than other people. That's pretty debatable, honestly, if we get our news faster than anybody else. But I think the second point in this follow-through is really what the trade's about. Institutions may not react right away to that initial news catalyst because they may not make decisions until after the close, till the next morning, till they've had a risk assessment of some sort, and then they'll make a decision. And so the follow-through part of this trade can be totally independent of the actual moment that the news hits.
Sure. That was a good way to put it. I think that someone who's trading in a fashion that that we are as prop traders is quickly making decisions to capture that price movement, whereas maybe an institution who can either lose or earn a large sum of money would have to, as you said, make that risk assessment, and it takes time.
And it takes time to execute, because if we're in and out of the trades that we're making in some situations, like if they're talking about a hold period for 5 years, it can take a week or a month to work into that position. So,
well, for sure. Say an institution decides that the news is significant enough to exit their position in XYZ. They're holding 10 million shares, and the stock trades an average of 1 million shares a day. Unless they want to tank the share price, they're not going to be just dumping on the open market. So the bigger picture, I think we all know how the market was reacting in January. We were off around 10% from recent all-time highs, and there's this dynamic of there's a shift, there's a rotation out of growth stocks, and it's been happening for some time now, but it was very pronounced in the month of January. Peloton falls in this at-home basket, which is basically just stocks that really had a gain in their market valuation because of the lockdowns and such over the last 2 years, and Peloton specifically down 80% from just over 52 weeks ago. Let's see the overall market, and then I put this slide in to highlight how the growth stocks are underperforming and to show the difference between value, which is at the bottom. This is an ETF, VTV, that's used as a basket of value stocks. Typically those that have a lower valuation relative to that of their earnings, and then growth, SPYG. It's a growth ETF that really follows those companies that their valuation is based on future projections and their ability to grow and justify that valuation.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Here's the news, it's just a headline, and that's that Peloton was going to be halting production of their bikes, treadmills, signaling shifting demand, lower demand. We all know economics is defined in very simple terms, supply and demand. Any company that would be announcing this would not be the best news, so to speak. And for a company like Peloton, who they need to justify their valuation, I was saying, based on their growth projections, stopping production is a huge red flag. Not only that, but you're alluding to the fact that you can't even sell the inventory that you already have produced.
If you're halting production, you can't sell the inventory you have, and you're not showing enough potential demand coming forward. So for a growth company, if you can't sell what you have, which means you can't add more users or subscribers, plus you aren't going to be building any more, so the subscribers are just going to be trading around the products that you have. If that's the way this goes, that's bearish. Yeah. It doesn't matter if it's Peloton, which people are very strongly opinionated about. I own a Peloton, and I won't be selling it, nor will I be unsubscribing. However, you don't let that impact the fact that news like this is bearish, and that's it. If Tesla comes out and says, yep, we aren't going to produce any more cars because we're worried about our growth. We really want to preserve the cars that we do have. That's bearish. It's just, that's the catalyst, and as traders, that's the opportunity that we have, is to react to the catalyst and then focus on the intraday opportunities or multi-day opportunities that we get. And this would fall under the completely unexpected catalyst, because this didn't happen during earnings. This didn't happen, at a defined period of time. This came out pretty randomly on a Thursday afternoon. So, it was just a story that hit, and it's a bearish news story.
So here's some just stats on the stock itself, and I think what's important to note and what I would like to highlight out of these are the market cap, $9-10 billion, and the fact that they have a share float.
When was this market cap?
This was at the price right before the news hit.
Okay.
So
perfect.
roughly $31 a share.
Okay.
So highlighting both the market cap and the fact that there are 97% of all the shares that are trading on the open market, in that this is a real valuation. There are actually $9 billion worth of shares that are on people's books. This isn't just some.
And 80% of those are institutionally held.
Yeah, and they have to justify that. It's
what
not
was
that,
the all-time low in this?
I can't recall.
Okay, that's fine.
Yeah.
No, that's fine.
The fact
You're
that
just curious. I'm just curious because 80% institutional ownership, the 52-week range we're very much at the low end of the 52-week range. So you kind of are thinking about that. You add on the fact that what we're hearing is that institutions may have been more challenged with the recent pullback in growth names, particularly names that are the stay-at-home things that institutions made a lot of money on. So they're already feeling a little bit of heat, and then you get a bearish news catalyst on top of that. It's an interesting setup.
So here's the 1 minute chart. This is just a few minutes before the news hit. As you can see on the left, all the way up until the 8 p.m. after hours close.
So this is the fun part of this trade because the news hits. So this is why we review trades as well, is because the news hits. What does your thought process go to? And I like this. So if you can talk me through what you have here, the questions that you have to answer as the news hits or as you hear the news.
All right, so as far as a breaking news trade goes and not necessarily positioning myself for over the long term, it's an instant decision. I don't have much time if I want to be able to capture it for a good risk-reward trade. So what I'm thinking right away for this and any other breaking news trade is binary. It's positive, negative. Is this bullish or bearish? Should I open up a long or a short? Once that's determined and I'm deciding whether or not I want to be long or short, is the price action actually confirming the direction of that I believe that the news will drive the stock price in.
What are specifics of the price action that you're looking for?
So I'm looking for range expansion. I listed the intraday trading range on the intraday fundamentals.
291 range. Or something like that.
Yeah, it was roughly just under $3, and as you can see, it took less than 3 minutes to put in that entire day's trading range before, as well as there's a volume expansion.
But in theory, you've already executed your initial trade.
Correct. Yeah.
Okay.
I'm looking for just a very quick move.
Yep.
And if you want to zoom in even further, you can see the 1 minute bars instead of the daily trading range and how small they are relative to that of even just that first bar before people really start reacting.
Yep.
So the price action, I'm just looking for that directional move to the downside that I'm expecting because I'm expecting.
Are you looking at the volume profile at all?
The volume profile, no.
Okay.
No, I'm not.
It's just something to consider. I always look at volume. Because a lot of times you can get a price move in one direction, but if you're not getting volume to support it, that's when you can really get reversals quick. I know you and I were both in one trade a while ago or something that like went down, but it didn't go down on volume and then immediately came all the way back up. And that's sort of the risk of breaking news trades, where it sounds like a bearish catalyst, but whether our news source got the catalyst wrong or the market read it completely differently, you just always have to look. And so anytime I see the volume, I look for volume confirmation, and then it's sort of like, okay, that now it's interesting. So it's range expansion for me, range expansion, volume confirmation. And depending on the size of the volume that is coming in, I may adjust my trading profile accordingly. I might be more willing to hold. I might be less quick to look for a fast move and more think, okay, this is going to be my core. And now I'm just going to hold. And so, just things like that. So I was curious if you pay attention to this, because this is your trade. I'm not trying to tell you how to trade your trade, but like
volume profile, no, but volume.
Volume. Sorry.
Okay.
Yeah.
I'm interested.
Yeah.
Volume, yes, because
Okay.
as you said, there has to be the move to back. It's something that Shark has said that's always stuck with me is energy behind a move.
Yep.
And that is basically saying, is there enough volume?
You want to see the
absorb
energy
the price
building on this move, not going away.
For sure,
So,
great point, because we can see here that we have increasing volume as it's going down. That leads to the next part of the formula, which is that increased volume. It's validating the fact that this news is actually significant and it is relevant, and that we have more people getting involved. Or the second part, which is just people who are already involved deciding, wow, this really is significant and sizing up as it's going in that direction.
Yeah. Let's go to your executions, if you don't mind, because I think that's a good, you have an instantaneous decision. You have a trade decision, essentially. You wouldn't take this position, or I wouldn't take this position naturally, kind of instantaneously. I wouldn't take this position thinking, I'm going to hold this because I think that's the end of this company. It's going to all-time lows. But you do take the decision take the trade because you think that there's the potential of edge to the downside. And then you take the initial trade with your initial piece of risk. So I'm curious, where was your initial risk on this?
One thing I wanted to add based on what you were saying, and that's the volume to back the move. I left this out, and there can be some news out there that becomes publicly knowledge. People are made aware of some news, and it can be something that sounds like the most significant, impactful thing to a company. A company can be accused of fraud and being investigated by the DOJ. It does not matter if people aren't reacting to it. If there's not volume and traders aren't trading the news, then you can have the most convicted idea that this is going to go down. It doesn't matter if people aren't reacting. Yeah.
Or up. The important thing is looking at, for me at least, the important thing is looking at, so you get the initial downtick and you see the volume on the tick chart, but then you see how many times it tried to lift 28, and I remember that. Like, it's down a point or down whatever, 25 cents, 30 cents, but like that 28, it was like it just couldn't lift and couldn't lift and couldn't lift. And that was like, I think, a really interesting thing. So it's not like you're just blindly shorting. You can short against the price spike from the news, but really, like, you want to stay with it when it can't lift and can't lift and can't lift.
So breaking news trade and not necessarily structuring a trade for a follow through. For a multi-day move, it's going to be that scalp. It's going to be that just initial trying to take advantage of the rapid price movement and being able to, in this case, short as I'm betting against the stock, I'm betting on it going down, to be able to short that first move.
You get short against basically the breaking news price, which is good. Sometimes you'll get the pop up and you'll be able to actually add more size, like it would get a failure at like 30 and a half, 31 even, but it doesn't take out your price and you can actually get more short. There are times that are slow breaking negative news trades where the volume comes in, but there's a bid underneath it, and so it takes time to work through those prices, and then you kind of get the move that you're looking for. So you kind of have to have a stop in mind so you can manage your risk, but then we want to have a bunch of different scenarios laid out of how am I going to take profits. The thing that I really wanted to cover with you was your decision-making process into the first halt, because this is a unique one, and I kind of noticed this. You wanted to take risk off into the halt on the chance that there was a rebuttal. And that is something that happens so much later. It's very unlikely, in my trading experience, it's very unlikely that the company will be able to respond to a news story like this in a very short period of time. Typically, you're talking about 30, 40 minutes, an hour, or something that's a significant period of time down.
Days.
Yeah, hours, days before they can reply. That works both ways, because if they don't rebut, like after that night or the next night, remember with PayPal, you called that out before, they were going to buy Pinterest, yep, but they didn't even come back and refute it until like 2 days later, which if you're the management and your stock's dropped 20% and you haven't said anything about it, that kind of can lead to some questions about that. So there is that risk of them coming, of the company responding if you're trading this short, but that risk is something that's a little further down, and I usually try and think about it after the bounce or significantly further into the move. This move was so fast and with so much volume, you kind of want to be thinking, at least I'm going to hold some of this, because of the situation where it's such a bearish catalyst, and it's such an interesting setup. It's really kind of a unique situation. It's tough because you get that first down halt, and a stock like this, it has to move a full ATR in order to halt, and that's a tough thing to kind of conceptualize the first time. But the news is so bad and the response to it is so negative that you really want to be aggressive, and you really want to not just size into it as quickly as possible within your risk controls, but then you want to make sure you're going to get paid on it too. And if this is the trade you're going to make to the short side, you just want to make sure you're going to get paid on it. And it feels really good when you catch $2.50 or $1.50 or whatever with no heat into a halt. But you want to kind of remember, like, you don't want to be defensive in that situation. You actually want to have that controlled aggressiveness of, okay, like maybe they do come out and deny it. It's still, I'm still in from prices that I'm comfortable with. So maybe I'll cover half into the first halt, or maybe I'll do something else. maybe I'll cover a third or something like that. But you want that controlled aggressiveness, because in a moment like this is a trade that could make your week, your month.
Yeah, it should have.
It should have. And that's why we're talking about it now, and that's why we're reviewing it now, because it's a situation that's really tough to do in the moment. And I was short this as well, just kind of like, that sounds bad, I'm gonna hit it. And you saw it try and lift and it couldn't lift, and so I'm gonna hit more. And then all of a sudden it down halts and you're like, what do I do here? But you wanna have that in the back of your mind of, no, this is my trade. I'm going to be aggressive in a controlled manner. Maybe I'll move my stop to break even on the whole thing, and if I lose, and that's fine. But you need to make sure you're being aggressive enough in this, where you're willing to take advantage of the opportunity that's presented.
Yeah, looking back, I know how flawed it was to have the idea that it's necessary to take off my entire size to get flat before the stock halted. I saw it starting to lock up, and I just decided, I don't want to put on this risk. Worst case scenario, 5 minutes goes by, anything can happen in 5 minutes. It opens up, and it opens up at undisturbed, and then I'm more than stopped out at that time. And it was a quick decision that I definitely regret, and that next time I know I will have to just reduce rather than get flat if the news, I believe, is
or you could be
significant enough.
really aggressive, and if you can do it in a controlled way, you could add.
Sure.
Because there were some traders on our desk who missed that entire move and didn't do anything until that halt, and then they added into that halt. And, they might have outperformed you in this trade by missing all of the good work that you've just done.
Yeah, even though I was probably one of the first, I tend to be pretty quick, and I see other people's trades, and I tend to be one of the first. And even though I still missed that entire first move, down from 31 to around.
But that was instantaneous. I mean, that was really tough to be that fast. So.
Yeah, and back on what we went over just a moment ago is that there was that volume and price confirmation, and that's why these red dots on the chart, you can see that I was adding the position as it's going.
Yep.
So even though I was being aggressive, I decided to be a little bit more risk adverse into that hole, and definitely should have
So let's talk through a best case scenario for this. So let's go back to the chart really quickly and your executions, and let's talk through how you would have wanted to execute this trade, ideally.
Looking back, reevaluating how I went about this trade, what I would have liked to do differently is maybe just take off some size rather than get flat. I
25%, 30%?
If I had a script to assist me, I would like to take off enough where if the move went back to undisturbed, I would have been flat.
So 50%. Looking at where you added, right? You would have to take off at least 50%.
Yeah, I would have been able to make that calculation that quickly, I would say, because as it's about to halt, it's less than 2-3 seconds before the move's made, or before the stock gets put on ice. But I'd say 50%. And then being able to evaluate the price action between that halt and what ended up being the second of 3 halts to the downside. That would have been able to help that decision making on if it was necessary to get flat.
I mean, that was like open up straight down.
You tell someone was getting
had
a margin call and there was longs exiting instead of shorts, or just a mix of the two. So what I would like to do differently, just to answer your question, is take off half of the size rather than get flat. 1, I have the next 5 minutes as the stock's halted to evaluate if I made the right decision, and 2, then I can see what happens after the stock reopens for trading, if it's worth putting on more size or getting flat, or just keeping it as it is to hold for the bigger picture move.
What would be the bigger picture move for you?
For me, that was the second leg of this trade, and there was sort of the executions leading back into view up, and that was
tough,
the follow
though.
through.
You can't hold. I don't think if you're momentum trading it, you can hold that entire piece all the way down and then all the way back against you. Because we know this trade, we know it bounces.
The bounce trade.
The bounce trade is a really good trade, especially in this one where it halts down, had a huge flush, and then was right back above the halt price, like almost instantaneously. I mean, it flushed down. It was down almost $10 at one point. I think the exercise that we're doing is really important, and at home, it's very important to do this exercise of you did all the right things. And in the moment that you had the opportunity, you did all the right things. And then you had a moment that you can learn from. So now next time you get in this trade, because there will be something else that happens like this, you can do all the right things all the way through the trade. And so it's not about did you do it well this time or poorly this time. It's about how do you do it the right way next time. And that's what we want to focus on today is how do you do this the right way next time? And we've just reviewed, okay, next time it goes, I'm in from the prices I want to be in. I hit the news the right way. It's going into halt. I'm not going to be thinking, oh shoot, I should cover my entire position. I'm covering half, and then I'm making another trade decision. And then I'm covering down into an extreme move, and then I'm making another trade decision on the bounce. And so you're giving yourself the opportunity to get paid for the work that you're doing. And that's really what I think today is all about. Is it's not about did I execute this right or poor, or did I do exactly what I wanted to do or not. It's how can I do it better next time. And I think this is a great example of you've done everything right on the idea generation and studying this trade and understanding the basics of it. And now the only thing we have to do differently is in that moment, we can have a better plan for next time.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.